Welcome to the deep dive. So today, our mission really is to get into this huge transformation happening down in Florida, commercial real estate. Yeah, our sources are showing energy efficiency isn't just, a nice to have anymore. It looks like it's becoming the main driver for profit down there. So the goal for you listening is, can we pull out the key insights? Is betting on these green properties really the smart move financially? Is it foundational?
Yeah, and honestly, we can cut right to it. The evidence is, well, it's pretty overwhelming. This isn't some fleeting trend. It's a fundamental shift in how assets are valued. Our research, it pins down a really concrete link. Energy-efficient commercial properties in Florida, they're bringing in returns, on average, get this, 15% higher.
15%? That's staggering.
Compared to traditional ones. And it's not just, good for the planet, although that's part of it. It's a new economic reality, driven by efficiency, yes, but also what the market actually demands now.
Okay, let's unpack this immediately. Because 15%, that's the kind of premium that really redefines investment strategy, right? When you see that kind of potential uplift, the question isn't if you should invest, but maybe when. So what does the recent data show about the speed of this shift? Is it accelerating? We need proof.
The momentum is definitely palpable. And the data from Q1 2023, that really felt like an economic turning point. We saw just an absolute stampede of capital moving in. Investment in energy-efficient commercial property, it jumped 25% compared to Q1 2022.
Wow.
That quarter really signaled to the market, look, this isn't just coming, it's here now.
25% year-over-year growth in one asset class. I mean, that suggests this isn't niche anymore. It sounds like it's hit institutional maturity, not just early adopters.
Yeah.
So how did that actually play out? Day-to-day operations, pricing?
It impacted both, definitely. The demand side is pushing prices up. Sources show rental rates for these energy-efficient buildings went up about 12% on average. Tenants are willing to pay more? Why? Lower utility bills? Sure. But also just a modern experience. Certainty. And at the same time, we saw overall about a 15% drop in energy use across commercial properties in Florida.
15% drop in usage.
Yeah, it suggests efficiency is fast becoming, the baseline expectation, the new minimum.
That drop in energy use and the rise in rents, that's kind of the perfect storm, isn't it? It really confirms the savings are real and the demand is high. And this transformation is clearly being pushed by the big players, too.
Absolutely. This isn't just small boutique projects anymore. It's core strategy for major developers now. You see green tech developments prioritizing energy-saving tech in their new Miami office tower, or sustainable builders focusing on eco-friendly projects, commercial and residential, out in Orlando.
Right.
They're building efficiency into their actual business models from the start. They recognize that pretty soon, non-efficient properties, they can become stranded assets.
That frames the risk perfectly. Okay, so let's drill down on the profit side. The Florida Real Estate Association study confirmed that 15% higher ROI. So if you're an investor listening, how exactly do those energy-saving features translate into higher returns? What's making the money?
It's really a mix. Operational savings, yes, but also reduced risk perception. The study confirms the extra profit comes directly from, three main types of features.
Yeah.
Advanced HVAC systems, LED lighting, and smart building technology.
Okay, HVAC. We keep mentioning advanced HVAC. For listeners maybe not deep in CRE jargon, can you quickly define that? What is it and why does it offer such huge cost leverage?
Sure. HVAC, heating, ventilation, air conditioning. And in Florida, AC is easily the biggest energy hog in any building.
Makes sense.
So advanced HVAC uses things like smart sensors, maybe variable refrigerant flow, really well-insulated ductwork, all to control cooling precisely. It cuts down waste drastically, these advanced systems. They deliver average cost savings around 20%.
20%.
And that translates pretty directly into about a 12% ROI bump for the owner.
Okay, that really clarifies the mechanics. What about simpler upgrades, like lighting?
Right. Standard LED lighting gives you immediate savings, pretty reliably around 15% cost reduction. That delivers maybe a 10% ROI, still good. But where you really see the biggest impact, the hyper-optimization, is smart building technologies.
Right, that's the one you mentioned driving the top-end returns.
It is. Smart building tech integrates sensor networks, automation. It can cut costs by an average of 25%.
25% savings.
Which is what gets you to that maximum 15% ROI we talked about. But here's the really critical piece, strategically.
Yeah.
It's not just the operational savings for the owner, it's the tenant perspective. Tenants are the ones driving those premium rental rates.
Why? Because they want the savings too, or?
Partly savings, yes, but also it's becoming non-negotiable for their corporate image, their sustainability goals.
Ah, okay. So it's brand and ESG related as well.
Exactly. Companies see energy efficiency as a key factor now when they choose where to locate. It's a must-have.
So for developers, it's not just cutting costs today. It's basically future-proofing their assets against maybe tighter environmental rules down the line. Asset security.
Precisely.
Mm.
If you can't show verifiable lower operating costs or reduced carbon footprint, you risk losing those high-quality corporate tenants to a competitor who can show it. It's becoming a massive competitive edge.
This all sounds incredibly positive, maybe almost too positive, if the returns are consistently 15% higher. What's the biggest hurdle? Or the risk investors need to watch out for? Is it harder with older buildings?
That's definitely a key challenge. The sources highlight that retrofitting older buildings, it pays off massively in the end, sure, but it involves significant upfront capital and potentially disrupting tenants during the work.
Right, the installation hassle.
That barrier to entry is high, which is exactly why the state government decided it needed to step in.
Okay, perfect segue to the policy side. The Florida legislature just passed new incentives, right, specifically designed to tackle that high upfront cost barrier you mentioned.
They absolutely did. And this legislation, it's potentially a game changer for making older buildings viable again for upgrades. The new tax credit program. It's really generous. Property owners can get credits up to 50% of the cost of eligible upgrades.
Like 50%, half.
50%, yes.
So half the capital needed for a major modernization could just be offset by the state. That completely changes the math on retrofitting, doesn't it? It makes borderline properties suddenly very viable, reduces investor risk hugely.
It fundamentally resets the payback period. The main condition is that the upgrades have to meet or beat state energy efficiency standards.
Makes sense.
And since it starts next year, we expect to see a really rapid mobilization, a lot of retrofit projects kicking off once those funds are actually available.
So we've got policy pushing change, but those changes depend on tech to deliver the savings. This is where it gets really interesting for me. Beyond the advanced HVAC, what specific tech advances are really moving the needle on costs?
It's all about integrating intelligence, really. First, those next-gen HVAC systems we talked about.
Yeah.
They're now independently verified, proven to cut costs by a full 30% compared to typical older systems.
30% versus older systems. That's a massive lifetime saving.
Huge difference. And then there's the brain of the operation.
By AI.
Exactly. AI-powered building management systems. They don't just set a thermostat. They adjust energy use constantly, in real time, based on really granular stuff like occupancy levels in specific rooms or wings, micro weather patterns outside, predicted use based on time of day.
Wow, that detailed.
Yeah, this hyper-optimization, that's what gets you those peak 25% savings we mentioned. And we also have to mention solar integration. It's becoming much more common.
Right.
That doesn't just cut utility bills now. It gives buildings some insulation against future energy price spikes. Volatility protection.
Okay, so we have tenants wanting it, the tech delivering it, policy incentivizing it. This really does sound like that perfect storm of opportunity, and it must be attracting big money, the major investment firms.
Definitely. The clearest signal is seeing that massive institutional capital moving in. We saw BlackRock, one of the world's biggest asset managers. They announced a huge $500 million Florida Green Building Fund, specifically for this sector.
$500 million
Right.
from BlackRock. Okay, when a player like that commits that level of capital, it basically signals the market risk is seen as managed, right? That this is viewed as stable long-term.
Yeah.
What kind of due diligence do you think they did that convinced them? What gives them that confidence?
Well, their investment signals confidence in, I'd say, two main things. One, regulatory stability that these incentives are likely to stick around. And two, confidence that the underlying technology works. It's proven, it's scalable.
Right.
This isn't like venture capital betting on a risky startup anymore. This is an asset acquisition strategy based on proven ROI. Their entry is kind of the definitive sign that green building is, well, it's not fringe finance any longer.
That really hammers home the scale of this shift. And locally, too, we're seeing coordination.
Yes. Local investment groups are forming an energy efficiency consortium, pooling resources and expertise. And confirming the state's appeal, Florida's business-friendly climate is pulling in significant international investors, too. They see potential for better risk-adjusted returns here compared to maybe other global markets right now.
Okay, so the capital is pouring in from everywhere, which brings up the crucial where question, geography. With all this investment, where is the growth most intense? Which regions are leading the charge in green commercial property?
It's definitely concentrated in the major metro areas, as you might expect. Miami-Dade County, it's leading the pack. An astonishing 28% growth in energy-efficient properties recently.
28%.
Yeah, fueled by major new developments and a real eagerness there to deploy the absolute latest green tech.
What about Central Florida, Orlando's tech scene?
Orlando's Lake Nona Smart District is a great example. It's expanding fast, showing about 22% growth. Lake Nona is really like a living lab for using advanced tech, AI, IoT.
Internet of Things, connecting devices.
Exactly. Integrating everyday devices into the smart management system for really comprehensive energy and building management. We're also seeing significant activity over in Tampa Bay and along the Gulf Coast. Strong 18% growth there. That's largely driven by big redevelopment projects, often leveraging those new tax credits we discussed.
Okay, so the money's flowing, the incentives are there, but money only moves this fast if the traditional gatekeepers, the banks, are on board. How are financial institutions reacting? Are they facilitating this green rush?
They're adapting quickly, primarily because they now see these assets as lower risk. So financial institutions have rolled out specialized loan products, green mortgages, for example, offering better rates. Why? Because the operational certainty, the predictable cash flows in these efficient buildings, it makes defaults less likely.
Interesting. Can you give specifics? What kind of preferential rates are we talking about?
Sure. We're seeing products out there like a sustainable property loan being offered around 4.0% interest. And crucially, lenders are often willing to finance more of the project now, sometimes up to 90% loan to value.
90% LTV.
Yeah, because the asset quality is perceived as higher, the cash flow is more stable. It really signals that banks view these properties as safer long-term investments.
That high LTV, that willingness to finance so much, that confirms the industry really believes in the long-term value.
It really does. And on top of that, federal programs are helping smaller players get involved too. The SBA, the Small Business Administration, has enhanced its programs. They have Green Business Loan Program now, offering up to $500,000 for small businesses.
500,000.
Yeah, with rates potentially as low as 3.75%. So the entire lending ecosystem is really gearing up to support this shift.
Which brings us neatly to the future. Given all these factors converging, policy, capital, tech, lending, what do the experts predict for the near term? What's the outlook for, say, 2025?
The forecasts are remarkably consistent and extremely bullish. Experts are predicting the value of these energy-efficient properties will just keep climbing year on year through 2025. They're anticipating maybe a 12% annual increase in value in 2024, followed by an even stronger 15% increase in 2025.
15% again. Why the jump predicted for 2025 specifically?
That stronger forecast for 25, it's largely tied to expected regulatory changes. Experts think upcoming regulations will likely include stricter energy efficiency standards for all new buildings.
Ah, okay. Raising the bar.
Exactly. And potentially enhanced tax credits, specifically tied to achieving formal green building certifications like LED or Green Globes. So the policy pressure is only expected to ramp up, which means today's green assets, they become tomorrow's baseline compliance standard. That makes them inherently more valuable over time.
Okay, so let's try and summarize this deep dive for you, the listener. We've got undeniable market data, a real surge, that 25% investment growth back in Q1 2023. We've identified concrete features like smart building tech driving those impressive 15% higher ROIs. We have truly game-changing policy like that 50% tax credit, basically de-risking retrofits, and disruptive tech like next-gen HVAC cutting costs by 30%. This really feels like a full-scale revolution. It's driven by macro capital, yes, think BlackRock's $500 million fund, but also by local businesses just seeking crucial cost savings and a competitive edge.
Right. And since we can clearly see future regulatory changes on the horizon, stricter building codes for new builds, probably more incentive for retrofitting existing ones, the critical strategic question for you to really think about in this fast-changing market is this. With the cost of not being efficient only going up, where's the greatest opportunity right now? Is it in building brand new super efficient properties from scratch? Or is it maybe in jumping on those incredible new tax incentives to retrofit and modernize the existing, maybe non-compliant building stock before that regulatory hammer inevitably drops?